Well, folks, here are my latest thoughts on Tesla after hearing Elon Musk and spending some more time going through the statements. Oh boy, folks. All right, so bottom line first. Cash flow, okay. Yeah, we have cash flow. We have an operating cash flow at Tesla of $2.351 billion. Yes, we have free cash flow of $621 billion. That's when we take the actual operating cash flow and we subtract out their investments of about 1.73 into things like their factory. That number is still positive. But what we really don't have is a positive change in net cash if we take out the Bitcoin position. This is, in my opinion, a little bit of an issue because if you look at the current assets that Tesla has and you subtract off their current liabilities, and I've adjusted this slightly for not only rounding purposes to make this simpler, but also because there are things like deferred revenue, which you expect is going to turn into cash, blah, 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 blah. Point is, if you take their current assets, which is like their big old cash position, which they have a lot of cash, okay? People like to say, oh, well, Tesla has a lot of cash. Yeah, they got 18.3 billion in cash. Okay, I got it. But if you take the current cash and marketable securities and accounts receivable, and then you ignore the deferred revenues in the liability section, you still end up getting current assets minus current liabilities of about 0. That means that if Tesla needs any additional money to fund potential quarter-to-quarter losses or wanting to build a new factory, what's Tesla going to have to do? They'll have to do a bond raise or they'll have to sell or issue and sell new stock. And those are things that dilute existing shareholders. We don't like hearing that. Last time this happened in September of 2021, and we did a $5 billion bond sale, what happened? Well, the stock, this basically started the drop of the stock in the amount of about 35%. Now, that September was a little bit of a rough month. Other tech stocks fell as well, but it was definitely the turning point for Tesla, at least in the short term. And so, anytime you get cash that is close to being negative at any point on statements, people don't like it. And the reality is the following. Tesla sold at a $106 billion loss Bitcoin. They said in the earnings call they lost $106 billion. If you take the $936 billion of change in cash and you subtract that by the end change in cash that Tesla had, the net change in cash Tesla had of 847 million, you would have gotten, that is, if you did not sell this Bitcoin, you would have been at negative, and this should be reversed, but whatever, you would have been at negative $89 million as a change in cash. And I think that would have spooked some folks. Now, that would just be a short-term thing, probably a short-term buying opportunity if you're a big Tesla bull, but it is something that we were pretty dang close to having a negative number on, and the Bitcoin sale by Elon Musk, where Elon Musk decided to sell 75% of Tesla's Bitcoin, is something that ultimately kept that number positive. Had it not been for that, net change in cash would have been a big fat negative. So we've got that clarity out of the way. Now, why did Elon do this? Well, Elon says he did this because they were uncertain about Shanghai. And let's be clear about Shanghai. Shanghai props the margins a lot because without Shanghai, we ended up with margins excluding regulatory credits of 26.2%, which is actually the lowest level that we've seen since the second quarter of 2021, when we were just about at just a little bit over 25.8%, somewhere around there. The point is, it's the lowest level we have seen since then. Yeah, 25.8 was the prior low last Q2. And again, that's 25.8. So we still beat that. But in my opinion, we mostly beat that because we saw Model S and X deliveries up substantially, up 9% quarter over quarter. That's a pretty good boost of Model S and X deliveries. In fact, if you go all the way back to the last time we had margins this low, we only delivered 2.3 thousand Model S's and X's. Now we delivered 16.4 thousand Model S's and X's, which is still 9% greater than the last quarter. So it goes to show you, like, the S's and X's were the only thing that kept this margin together. If we didn't have the S's and X's and Shanghai were closed, we would have had a terrible margin miss. And unfortunately, this was one of the scenarios that I said, hey, how inefficient is Tesla without Shanghai? Unfortunately, it's still pretty inefficient without Shanghai. Now, hopefully that once Berlin and Austin ramp, we end up getting some substantial efficiency, right? That's what we want to see. And we then start growing like Shanghai. But look, the dollar cost of labor in Shanghai is obviously a lot cheaper than what it could be in Berlin or in Texas. So you're always going to have this large advantage from Shanghai. But it just shows you that China is a pretty big piece of the puzzle for Tesla. And remember, international sales make up about 55% of sales for Tesla. We did have a nice bump in solar deployed, especially a storage deployment at 11 or 1.1 gigawatts, which is really, really nice. That is a nice, that's a decline from Q2 of last year, but it's definitely a nice increase from last quarter where we had 846 megawatts deployed and now we're at 1.133. But some of the other things that we really have to talk about or not only what we talked about regarding the sort of cash flow and net change in cash, not only what we talked about in margin, but also what about the consumer? So Elon Musk did first pull Tim Cook. He first dodged a question about the consumer and just basically talked about how the big problem for Tesla is production, not the consumer. That if people order a hamburger, they want it right away. They don't want to wait 3 hours. And the same should be true of a car. People actually don't want to wait. We don't want an order backlog. Yeah, sure, maybe you don't want an order backlog, Elon, but I want an order backlog because I don't want to see Tesla doing 1.4 million vehicles per year and having no order backlog. I want to see an order backlog until we get to like 5 to 10 million vehicles produced. And if we get to 10 million a year and then it's like, yeah, you could go to the lot and pick up a Tesla just like you could pick up a Toyota Prius, that's fine. But until that point, I want to see a backlog because I want to be able to, I want to grow into the ramp phase. Why you buy Tesla, like I said on the live stream, is because of the ramp of these factories. The factory is the product here, folks. If we can copy and paste the factory, we win. Unfortunately, we got no mention of the new factory, no mention of insurance, a brief mention that the Cybertruck might come out for deliveries in the second half of 2023. So we're kicking the can down the road again. All right, also not a surprise. But when we're finally drilled about the consumer again, first their CFO says, no, we're not seeing an impact, and then says, well, maybe a little. Elon Musk is heard chiming in going, some, maybe. Elon Musk continues by saying that orders are manic depressive, that it seems like orders really move the way either markets or the consumer sentiment moves. And so in my opinion, if you have like a really big green day, you've got like 3 million retail shareholders for Tesla, and I think only 1.5 million retail owners of Teslas. So you get like a really, really green day, more people are ordering Teslas. So not a surprise that you're seeing, people's sentiment match their spending at all. But Elon mentions that they don't really see this as much of a predictor for the consumer, that they're good. Now, there were some discussions about chips and batteries and AI Day. AI Day, they're very excited about. They think it'll be better than what people expect. They think next year they'll really get to using the 4680s, that right now they have enough 2170s to get through the year. And they don't really have to worry about 4680s, though they started producing those in one of their new gigafactories, which is great. And we expect at some point to be at roughly a production of 1,000 4680s per week, which is quite impressive. Elon again talking about inflation potentially trending down and then Tesla lowering prices over time. He thinks that prices are embarrassingly high. However, the CFO and Elon think that we're going to see inflation, mostly due to commodities, decline in the third quarter versus the second quarter. Again, they lost about $106 million on their BTC impairment. And Elon Musk mentioned that they'd be open to buying more BTC in the future. So now, bottom line on everything. For this earnings call and this earnings report, could it have been better for this hellish quarter? Absolutely. Margin could have been stable. It wasn't. It fell. Cash flow was there, yes, but net change in cash was propped up by BTC, which is kind of lame because it means Elon had to go to the piggy bank because he was that worried about Tesla and Tesla Shanghai, which just again reiterates how much power China has over Tesla. Not sure how much we love that in the days after Ukraine. Is what it is. It's a red flag though. And again, we need gigafactory announcements to really grow into Wall Street's expectations. Otherwise, we've got another red flag. Regarding the consumer, fine. Demand is still there, more than production right now. Great. But I don't even want to spend time so much talking about the consumer. I want to know more about the ramp. Let's get Berlin and Austin figured out. Let's get that coupon code before it expires on the 28th and make some money.